Hello to all you crypto aficionados, and we got some big news for you today. The first object tends to be Elon Musk. Yes, Elongus Muscus is the scientific name, and he wants to make a big splash. And it seems to cause some kind of rumors in crypto. Not FOMO, not pump, because we haven't pumped today, but rumors. He said he wants to make X, or Twitter, an updated version of PayPal. Why does that affect crypto? If you remember, PayPal is really getting into the crypto market. They're offering new coins, and they want to become a true exchange. Now, people in crypto are taking that to mean that Elon Musk wants to one-up them and offer even more coins to exchange. Now, I don't actually know if that's true or not. It's probably just a lot of speculated rumor. But remember, X or Twitter still has hundreds of millions of users, and they can get part of those users to actually dump into crypto if they actually make a platform. And a lot of users are very, very dedicated to X, and they would be interested if X made a crypto market. So I really hope that this is true. Of course, it is Elon Musk, and he does really like screwing with the crypto bros. So he could just be doing this for attention again. It's like an Elon Musk thing to do. But I really do hope this is true. We need new investors in crypto because we can't really get them right now. And I do think X's move would make a lot of people actually come into the crypto verse. Elon Musk, very popular guy in crypto. Wish it wasn't really that way. But he can actually have some power to actually like make new people come into crypto. And some people are saying he's much more likely to make X a stock trading platform. That could be true as well. There's even more money in that. But, you know, if you like privacy and security, and if he wants to give the SEC the middle finger, which we all know he does, he will actually get into crypto, hopefully bring hundreds of thousands, if not millions of investors in via X. Because, you know, X is actually a really big platform for crypto influencers. Some people who have gotten deleted on YouTube actually do go to X to vent their crypto woes. And we know BitBoy, the guy that basically got fired, might start his adventure there for his own channel. So Elon Musk, X, crypto bros, could be a possibility, and it would be a very, very intriguing possibility for the world of crypto. And I don't think Elon Musk is afraid to take on the SEC with the giant pile of war chest money that he actually has. And the SEC has actually lost against Elon Musk before, so they would actually be careful. What's preventing him from coming in right now? I do believe that Elon Musk is sitting on the side like all the other exchanges or would-be exchanges and looking at the Coinbase lawsuit. If Coinbase wins the secondary listing lawsuit, I do believe that Elon Musk will come in. Because right now, if the secondary sales get deemed not securities, which they very well might, that means all the exchanges can freely list crypto. And I think that is the green light that Elon Musk looks for. Even though he's not afraid to take on the SEC, he probably doesn't want that much trouble from the SEC either. So that's the situation we have with Elongus Muscus right now when it actually comes to crypto. And it could be very, very exciting for crypto investors to have Twitter come in if that happens. The SEC has charged the first NFT project with a securities case. And this project actually did mention that the effect of, or the abilities or the actions of the promoter, which is the company, would actually affect investor profits. So the SEC has a case there. So the company is called Impact Theory. It produces entertainment and educational podcasts and was trying to build the next Disney when it invited investors to purchase its NFTs. So obviously the SEC jumped on this, and they charged the media company with conducting unregistered security sales, and I think they won, and this was 2 years ago, so it took 2 years for this to actually resolve. So the company encouraged potential investors to view the purchase of a founder's key as an investment into the business. So because it's an investment into the business, the SEC has a much stronger case. The Impact Theory emphasized that it was trying to build the next Disney, and if successful, and this is the key part, it would deliver tremendous value to the founder's key purchasers. So basically the keys were a way to generate money, and if it was successful, it would result in price gain for the keys purchasers. So obviously that puts it in the bag of securities. The SEC found that the NFTs were investment contracts. Obviously they were promoted as such, and the company violated the Securities Act of 1933 without selling them for registration. Now, this does not make me happy. Not because these particular NFTs were found as securities, they probably in all likelihood were securities, but if the SEC now has ammo to apply this to all NFT cases. And I'm afraid for tokenization via NFTs and also gaming via NFTs. They could say these gaming NFTs are actually securities too, and then point to this case. Because there's so few of these cases right now that have been decided, this could become a precedent, and that would be really, really bad for the NFT market. Remember, most NFTs are garbage. I don't disagree with that. I think most $1 million NFT JPEGs are complete garbage, and no one should actually buy them. But that's not the point of this. The point of this is that, like, legitimate NFTs, I don't know if there are any right now, but definitely in the next bull run, if gaming decides to make NFTs to represent in-game items or things like that, they could charge those with being securities as well, and that would tank the entire NFT market, which is not something we want, because the NFTs can make like both financial and crypto innovations in the future, and you don't really want the SEC blocking that. The SEC is seemingly hell-bent on blocking these things for whatever reason. So at least there is some precedent now that NFTs are securities contracts. This company had to pay $6.1 million in disgorgement. That's a lot. That's a prejudgment interest and civil penalty. They did not admit to the agent or denying the agency's findings, so they didn't admit fault, but they will have to return money to investors in founders' key NFTs. So they basically lost everything. Now, like I said, these particular NFTs were most likely investment contracts because the company did promote them as a way to actually make money, which was the company's own stupidity. But I don't want this to be a defining or precedent-setting case in the NFT market, because if it is, then all these other NFT projects, even the ones that aren't really investments but are just in-game NFTs or tokenization NFTs, could actually fall in the same bucket, and that would actually mean a lot of problems for the entire industry, which would not be good for us. Hong Kong actually has launched its first 5 coins, and the thing is, like, 3 of them are actually not securities, and 2 of them are securities. So it is with Hashkey, and that's Hong Kong's first registered cryptocurrency exchange, and it's launched a trading service for retail customers. So the exchange currently has Bitcoin, Ethereum, and USDT pairs. Those 3 are not securities, they're trading them. In addition, Polygon and Avalanche trading will begin in the coming days, but it's only for professional traders because these are considered securities by the Hong Kong's SEC. So the exchange, which previously only served professional investors, announced on Monday it was updated its license from the SEC to offer virtual asset trading services to individual clients. This is very good. We've been talking about Hong Kong for a long time, but it's finally opening up. Now, Hong Kong itself only opens up to a couple million customers if they are interested in cryptocurrency, but we're looking for a broader China opening because Hong Kong, even being a special economic zone, is part of China. And if China can see they can bring a lot of business via this crypto stuff, I think they will open crypto trading in China. Even if it is just Bitcoin, it would actually be a really, really big win for the industry because, that's a lot of people coming into Bitcoin. And you better believe that there are plenty of people in China that are willing to actually gamble on high risk, high volatility items because, they want to be rich. There's a lot of people everywhere that wants to be rich. There's a lot of people in China. And if it's actually legal, even if it's only up to $5,000, they will throw that $5,000. And so that's what I'm looking at. It doesn't really even have to be altcoins. It could just be Bitcoin, but that will lift the rest of the market next year. And I'm hoping that comes. And last of all, but definitely not least of all, the House Financial Services Committee has written to the Fed about crypto. They're not very happy with the Fed's restrictions on crypto. And basically, they're accusing the Fed of making crypto policy. So they sent a missive there. The 2 letters are entitled Creation of Novel Activity Supervision Program and Supervision Non-Objection Processes for State Member Banks Seeking to Engage in Certain Activities Involving Dollar Tokens. The first of the letters establishes a formal program to enhance oversight of emerging fintech activities in banking, and they'll basically focus on crypto custody. The second letter outlined a supervisory approval process regarding state member banks to demonstrate adequate risk management capabilities before issuing, holding, or transacting in dollar-backed stablecoins. So they're arguing that these are too cumbersome, and they could actually hinder crypto progress in the area. And that is true. This combined with the tax laws could actually make it very hard for the companies to actually operate. Obviously, the Fed supports the dollar, so they might actually be afraid of crypto because crypto would actually deny the Fed a lot of power. And the thing is, besides that, banks must receive written non-objection from the Fed prior to engaging in these emerging activities, which will undergo heightened monitoring. So a lot of restrictions that the Fed actually wants to push. But the Financial Services Committee is saying that the Fed is making too many policies themselves, and they should not actually make too many policies themselves. So the thing is, like, they say if the letters remain in place, it could deter financial institutions from participating in the digital asset ecosystem. And the thing is, like, the Fed published 2 controversial letters as well. And the Services Committee is trying to provide clarity in the industry. The letter states that Congress understands the need to provide regulatory certainty for payment stablecoins on digital assets. It also mentions that this regulation led to the Clarity of Payment Solutions Stablecoin Act. However, the committee wrote that instead of working with Congress less than 2 weeks after the committee's action, the Fed released the 2 letters. The committee believes the letters actively prevent banks from issuing payment stablecoins or engaging with digital assets, which they don't want. The House Financial Services Committee is GOP controlled, and they do actually want banks to interact with digital assets. So this actually might put a stay in the Fed and make them think twice about what they're doing, which is what we want. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.